The Indian economy threw a surprise by growing mildly faster than expected by some analysts for the 3 months ended March 2025. What helped the economy do this? And should we be really cheering ourselves hoarse over the fact that India is now within striking distance of Japan in terms of GDP numbers? Hello and welcome back to Business Matters of the Hindu with me, K. Bharat Kumar. Last week, the Indian government said that the economy had grown 7.4% for the 3 months ended March 2025. A few days prior, 4 agencies, SBI Research, Morgan Stanley, Nomura, and Barclays, had estimated growth to be anywhere between 6.4 and 7.2% for the 3 months. The final figures showed that full year growth, that is for FY25, stood at 6.5%, far slower than the robust 9.4% seen for 2023-24. December last, the Reserve Bank of India itself had projected growth for the 3 months ended March 2025 at 7.2%, a wee bit slower than what it actually turned out to be. On the final numbers, SBI Research points out that a sharp increase in indirect taxes has helped nudge GDP numbers upwards. You may recall that GST collections grew at a 12.3% for January of this year, 9.1% for February, and 9.9% in March 2025. Let's see which key sectors that either spurred or dragged down growth. A look at the chart on your screens tells you that agriculture showed some healthy growth trends, rising 5.4% in Q4 up from an anemic 0.9% a year earlier. This helped propel full year growth to 4.6% compared with 2.7% in the previous year. Manufacturing, for long considered the Achilles heel for the Indian economy, is still sluggish. The gross value added, or the GVA, from the sector increased 4.5% compared with a far healthier 12.3% in the previous year. The construction industry grew 10.8% in the fourth quarter, faster than the 8.7% seen in Q4 of 23-24. Full year growth stood at 9.4%, down from 10.4% in 23-24. Some see a bright spot on the consumption front. Though government consumption expenditure slowed, private final consumption expenditure, or PFCE, increased 7.2% for the year compared with 5.6% in the previous year. But the figures for Q4, that is the quarter ended March 2025, show a less rosy picture. An editorial in The Hindu on the topic tells us that the much hyped effect on consumption expenditure does not seem to have materialized. Growth in PFCE in Q4, that is the quarter in which the Kumbh Mela took place, came in at 6%, the slowest in 5 quarters. But absolute numbers apart, the more important thing is to look at what the current growth means for the future. In the near term, India will have to maneuver around geopolitical and tariff risks. The US administration has brought in an atmosphere of uncertainty with a now-on, now-off approach to tariff policy, which means that private capital expenditure, that is capital expenditure by the private sector, which is a prerequisite for healthy growth and which itself has been patchy in the recent past, would likely continue such behavior. As a Reuters article quotes Madhavi Arora, lead economist at MK Global, as saying, the fourth quarter growth print partly reflects the backloaded spending effect of the government, both central and states, led more by public capex spending. And despite quickened spending by the governments, the gross fixed capital formation, or a measure of asset creation by both the public and the private sectors, saw growth slow to about 7% for FY25, compared with 8.8% growth in the previous year. So much for the granular details in the numbers. Let's shift focus to the cheers stemming from the news that India has overtaken or will overtake in the near term Japan in terms of GDP numbers. The IMF, in its latest World Economic Outlook, has projected that India's nominal GDP will be $4.18 trillion in 2025, overtaking Japan as the 4th largest economy in the world. While it is certainly a step forward for India, the decibel level of the cheers certainly needs to come down by a notch. And here's why. An editorial in the Hindu Business Line last week points out that in 2019, Japan's nominal GDP at $5.11 trillion was 82% higher than India's $2.83 trillion. To note, India suffered a much larger contraction than Japan, 5.7% versus 1.2% in the pandemic year of 2020. Post-pandemic, India grew at a much healthier pace than some Western economies, while Japan actually went through a period of contraction. Also, India was able to achieve this without widening its fiscal deficit too much to its credit. But we'll have to remember that given the sheer size of our population and a large segment that has healthy working age people in it, it's not very surprising that India was able to achieve this in terms of going up a notch or within striking distance of being there up a notch over Japan shortly. Though India will overtake Japan in economic size in the near term, our GDP per capita or per head still has a long way to go. The chart on your screens shows GDP per capita in dollar terms for 2025. India is at about $2,900. Japan is at almost $34,000. US, of course, tops the chart at $89,000. Germany being $56,000 almost, while China itself is much higher than India at $13,700. The editorial also points out that India's growth, having been what it has in the last few years, the country has been able to lift millions out of poverty, but inequality is still a cause for concern. The recent Household Consumption Expenditure Survey showed that in 2024, average per capita household spending in rural India was a mere 4,122 rupees per month. This was 41% less than in urban households. Meanwhile, households in states such as Bihar, Chhattisgarh, Jharkhand get by spending less than half of what households in southern states do. What do you think? How do you think India is doing on the growth front? We'd love to hear from you. Leave your views in the comment section below. That brings us to the Did You Know section of our episode. Did you know that in urban India, the creamy layer or the top 5% among households managed per capita spending of over 20,300 a month, while the bottom 5% households eked out a living with about 2,376. This is from the same survey that we referred to earlier in this episode. And here's the quiz question for the week. What is India's per capita income measured by purchasing power parity, and how does it compare with China and Japan? And here's the answer to the question from the last episode, which was, when was the term artificial intelligence originally coined? Computer scientist Alan Turing is considered the father of AI, due in part to his work introducing the Turing test in 1950. Another computer scientist, John McCarthy, coined the term artificial intelligence in 1955 as part of a research proposal. He wanted to test a theory that a machine could prescribe the core principles of intelligence. That brings us to the end of this episode. If you enjoyed what you saw, do not forget to like, share, and subscribe. Until we meet again, have a lovely time ahead.